Hello friends, hope you all are doing fine. I am CA Purnima and I have cleared the IBBI registered valuer exam in early January this year. I hope by now you all are aware about the registered valuer exam conducted by IBBI for land and building asset class. This video is all about the basic concepts of valuation relevant to the land and building asset class only. Friends, we are covering today very basic yet most important concept in the field of valuation as far as real estate valuation is concerned. So let's move on with the video. Before we move further to understand concepts of cost, price and value, it is very important to look at the definition of property valuation. Property valuation is the process which determines the economic value of a real estate. By economic, we mean fair market value of the property, the price at which a knowledgeable seller willingly sells his property to a knowledgeable buyer who is willingly purchasing it. One thing which also needs to be kept in mind that valuation is always date specific. Also, there are broadly three approaches to value an asset: market, income, and cost approach of valuation. We will also discuss about all these approaches in detail in due course of time. Friends, so let us start with the famous quote of a world-renowned investor, Mr. Warren Buffett. I'm sure all of you must have heard or read about him. He says that price is what you pay and value is what you get, which means that price and value are two different things. He has applied this concept in all his investment strategies and has become one of the most successful investors of all time. So let's start with the contents and see what we are going to cover in this video. Whenever we talk about valuation, whether we talk about financial asset valuation or real asset valuation, cost, price and value are the most important concepts to be discussed. So that will be our first topic of discussion today. And then we will talk about different types of value as far as real estate valuation is concerned. And lastly, we will discuss about the basic elements of value, where I will tell you a very interesting way of remembering these basic elements of value. You all must have heard about cost, price, and value in day-to-day life also. These terms appear so similar, but in context of valuation, they have very different meanings. Let's first understand their standard meaning, then we will understand them in depth with the help of respective examples. So if I say cost in simple words is what you spend. It is the aggregate monetary value, that means the money you actually spent on the inputs used in the production of goods or delivery of service. So if you are into production of goods, so whatever cost you have incurred for the inputs being used in that particular product, that will constitute cost for you. So suppose if you are planning to construct a house, the amount you actually spent on the material used for constructing that particular house constitutes cost for you. So this is quite a simple concept and easily understandable also. Now let's talk about price. If I say in simple words, price is what you are paying to the seller to buy a property. In every commercial transaction, there are two parties, buyer and seller. One is selling the asset and another is purchasing the same. When such exchange takes place, the consideration used for the same is nothing but the price. So we can say that price is the amount to be paid in order to get the product or service, and for real estate purposes, the land or the property under consideration. So now let us again take a simple example to understand the concept of price. Suppose you are purchasing a house and you have paid rupees 15 lakh as the purchase price, including brokerage and all other miscellaneous charges. So that 15 lakh would be the price for you to purchase that house. So one important thing which you can note about price is that it is driven by the demand and supply conditions in the market about that particular asset under consideration. So here comes the concept of value. I believe most of you are clear with the cost and price concepts as they are pretty simple also. Now let us understand this concept of value carefully. Value in simple terms I can say is that what you get. So value of a product or service is the utility or worth of a product or service for an individual. Or we can say that value is the price that customer thinks is appropriate for the product or service that you offer. One more special quality of value is that it's not compulsorily be measured in terms of money. Let's understand concept of value with the help of an interesting example. I do not know how many of you have seen the famous Bollywood movie called Diwar, starring Mr. Amitabh Bachchan. In this movie, Mr. Amitabh purchased a building from a businessman for say 1 crore, and that businessman was very happy thinking that he has made a profit by selling it to Mr. Amitabh Bachchan for such a price, as the market price of that building was around 60-70 lakhs. So he was thinking that he has made a gain of 30 odd lakhs in selling the property for Mr. Bachchan for 1 crore. When that businessman said to Mr. Amitabh that you do not know how to do business because the market price of this building is very less and you have paid me more. But Mr. Amitabh said that he has actually got that building for a less price because he wants to buy that building at any cost. But why was the what was the reason for his saying this? Because this was the same building in whose construction his own mother, Amitabh Bachchan's mother in that movie, has worked as a labor, and he wants to buy that same building and gift it to his mother. So that was the value of that building for him, which cannot be measured in monetary terms in this case. Also, by now you all must have understood that price is a fact, however, value is an estimate. I hope you could relate this example and understand the meaning of value. I'm sorry I could not upload that video clip here because of the YouTube copyright violation policy. You can watch that video as per the link given in the description below so that you can recall that example clearly and understand the concept of value. Go to another concept for the day, which is types of value. There are four common types of values as far as real estate valuation is concerned. First is market value. Market value is the value that appraisals deal with most often, or we can say that it is the value which is most often concerned with in the typical real estate transaction. Please note the word typical here. A typical buyer and a typical seller will establish market value with the price the seller is willing to sell for and the buyer is willing to pay. Remember this Diwar movie example. That building was of special value to Mr. Amitabh Bachchan as his sentiments were attached to that building. The typical buyer in the market might not pay more for that building, but for Mr. Amitabh Bachchan, that building was really precious as his own mother has worked in that building and he want to purchase that building at any cost. And the next is value in use. Value in use is the value a property has to a specific person who may use it for a specific purpose that's generally unavailable to the typical buyer. Suppose a doctor obtains a special permission to use two rooms in a house as a medical office. The typical buyer looks at such a house and puts a value on those rooms for personal use. However, another doctor looking at that property may be willing to pay a higher price because of this ability to use those rooms as a medical office. So, value of a building or a property changes as per the use of the buyer. Third is the investment value. It is the value to a specific investor with a specific plan for the property. But how it is different from value in use? Value in use generally presupposes a use already in place, but an investment value assumes a use that may be proposed. And last comes is the assessed value. It is the value placed on a property for tax purposes. It is associated with the term ad valorem, which means according to the value. So here we have covered the types of value concept. Now let's move on to our last concept for this video, which is regarding basic elements of value. For valuation purposes, there are four essential elements that create value in an item, or we can say that value of a particular asset depends on these elements. For simplicity, we can call it as stud. I have made this easy for you so that you can remember these for exam purposes. And if this question is coming in exam as an MCQ, like which of the following is not an element of value? So if you remember stud, you will definitely answer that question correctly. Stud is scarcity, transferability, utility, and demand. So one first element for value, basic element for value is scarcity, which means how much is there of it. It means the finite supply of competing properties. The number of similar or competing properties for sale definitely impact the value of property being valued. Scarcity is the present or anticipated supply of a property in relation to the demand for it. And the second one is similarly transferability. Can it really be sold? It implies that the ease with which ownership rights of a property can be transferred. This also decides the value of a property. Third element is utility. Can it be used? It basically means the ability to satisfy future owners' desires and needs. To have utility value, real estate should have the ability to provide shelter, income, amenities, or whatever use is being sought. Utility creates demand, but demand to be effective must be implemented by purchasing power. So we have also covered a certain portion of demand in in this utility segment itself, but still we are going with the fourth one, which is demand. So does anybody want it? The fourth element of value says, does anybody really want this property? The desire or need for ownership supported by financial means to satisfy the desire. This means buyer not only wish to purchase a particular real estate, but they also have the financial resources to buy that. So please understand the thin line of difference which is between utility and demand. Demand is not only just the wish to purchase a property, but also the financial backing that you have the resources to buy that property. So these are the basic four elements which derive the value of a property. I hope these elements of value are more clear to you now, and MCQ can come from these concepts. So please prepare well. This we are going to end this video. Thank you so much for watching. Hope you have enjoyed and learned from it. We will keep posting such videos on this channel for other valuation related concepts. Till then, take care and keep learning.